Hey there, savvy investors and curious minds. Welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a specific company that recently caught our attention, AZI Internet Technology Global Limited, trading under the ticker AZI. We'll explore why this particular stock is showing up on our high-cost-to-borrow screener and what that could mean for its future price action. Stay tuned, because understanding these dynamics is crucial for anyone looking to navigate the exciting, albeit risky, landscape of heavily shorted equities. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show AZI logo/chart. Let's zoom in on our subject for today, AZI Internet Technology Global Limited, or AZI. This company operates in the consumer cyclical sector, specifically within auto and truck dealerships, providing automotive products and services in the People's Republic of China. Their business covers everything from selling new cars and auto parts to offering automotive insurance-related services. Currently, AZI has a market capitalization of a modest $5 million. Looking at recent price action, AZI saw no change today, closing at plus 0.0%. Over the last 5 trading days, it's down minus 12.90%, but zoom out to the last 30 days, and it's up a notable plus 31.71%. Volume today was exceptionally low, just 98,500 shares, a stark contrast to its 30-day average volume of over 12 million shares. What is cost to borrow and why it matters? Before we get further into AZI, let's quickly explain what cost to borrow means. When a short seller wants to bet against a stock, they first need to borrow shares from a broker. The cost to borrow, or CTB, is essentially an interest rate, an annualized fee that the short seller pays for the privilege of holding those borrowed shares. Think of it like a rental fee. If a stock CTB is, say, 5%, you pay 5% of the share's value per year to borrow it. But what happens when demand to borrow stock is extremely high, and the supply of shares available to lend out is very low? That's when these fees can skyrocket, often exceeding 100%, even several 100% annually, as we'll see with AZI. A high CTB indicates that brokers are charging a premium because shares are scarce, and short sellers are desperate to maintain their positions. Why this stock is hard to borrow right now? Highlight CTB numbers on screen. Now, let's talk about why AZI Internet Technology Global Limited is on our radar. AZI currently sports an astronomical cost to borrow fee of 682.5% annualized. That's not a typo. Imagine paying almost 700% of the stock's value each year just to hold a short position. What's even more compelling is the CTB momentum is seen a plus 48 percentage point increase over just the last 5 trading days, signaling rapidly increasing demand and decreasing supply. Zoom in on shares available to underscore the scarcity. There are only about 200,000 shares currently available to borrow. When you consider AZI estimated float is around 4.4 million shares, having only 200,000 available to short is a very tight supply indeed. This combination of an extremely high and rapidly rising CTB coupled with a minuscule supply of borrowable shares is precisely why AZI appeared on our hard-to-borrow screener. Our internal composite squeeze score, which factors in all these elements along with price and volume momentum, sits at 41.1 out of 100 for AZI. Squeeze mechanics explained. So, what does it mean when a stock is hard to borrow with such a high CTB? It means the market believes there's significant downside, or at least short sellers are very aggressively betting on it. But these high borrowing costs can create a powder keg scenario for what's known as a short squeeze. A short squeeze occurs when a heavily shorted stock begins to rise in price. As the price goes up, short sellers start to face mounting losses, compounded by those hefty borrowing fees. To cut their losses and stop the bleeding, they're forced to buy back shares to close their short positions. This buying pressure, in turn, pushes the stock price even higher, triggering more short sellers to cover, creating a self-reinforcing upward spiral. However, it's critical to understand that a high cost to borrow does not guarantee a squeeze. It can also simply mean short sellers have extremely strong conviction in their bearish thesis and are willing to pay a premium to maintain their bet against AZI Internet Technology Global Limited. Dilution risk check. One crucial factor for any potential short squeeze is dilution risk. Dilution refers to when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can flood the market, effectively offsetting any buying pressure from short covering, and can completely negate a squeeze thesis, even if cost to borrow fees are sky high. Journal dilution risk graphic for AZI. Our check found no recent dilutive SEC filings such as -1, -3, or 424B forms in the last 90 days, which is a positive sign for any potential squeeze scenario. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. With AZI Internet Technology Global Limited showing such compelling hard-to-borrow metrics, what should you be watching for? Keep an eye on the 682.5% annualized cost-to-borrow fee. If it continues to climb, it indicates even more pressure on short sellers. Also, monitor the shares available to borrow. If that 200,000 number shrinks further, it intensifies the squeeze potential. Price action for AZI has been mixed, flat today, down -12.90% over 5 days, but up +31.71% over the last month. The current relative volume is the ARC's average, meaning today's volume of 98,500 shares is incredibly low compared to its average. While low volume can sometimes mean a stock is ripe for a sudden move due to limited liquidity, a genuine squeeze typically needs significant buying volume to really take off and force shorts to cover. Watch for a dramatic increase in daily volume for AZI, especially in positive price movements, as a potential catalyst. So, there you have it. AZI Internet Technology Global Limited AZI, a consumer cyclical stock in the auto and truck dealership sector, currently exhibiting some incredibly high cost to borrow fees and an extremely limited supply of shares to short. While these are certainly intriguing characteristics for those interested in short squeeze dynamics, remember that high CTB alone doesn't guarantee anything. Always approach these situations with thorough research and a clear understanding of the risks involved. We hope this deep dive into AZI and the mechanics of hard-to-borrow stocks has been educational. If you found this video helpful, please give it a like, subscribe to our channel for more in-depth stock analysis, and let us know in the comments below what other hard-to-borrow stocks you'd like us to cover next. Your questions and insights help our whole community learn and grow. Thanks for watching, and we'll see you in the next video.